Here are 5 things that I see don't get enough attention when you're looking to buy a digital company. 1, the growth of the industry. Rising tide raises all ships, and the industry growth is responsible for a large percentage of the company growth. So pay more attention to the growth of the industry. 2, company age. A 1-year-old or 2-year-old company is really just a startup, and it hasn't proven itself to be dynamic in the marketplace yet. A 5 or 10-year-old company has witnessed market cycles and economic cycles and customer issues and competition, and it has a proven set of skills and expertise and team members to handle these issues in the future. So aim for companies that are at least 5 years old. 3rd, working capital. Make sure that you have enough money to actually operate the company once you buy it, right? Working capital is the lifeblood of a company. Cash flow is king. You want to make sure you have enough gas in the tank to drive that car off the lot and get to the next gas station. So if you don't have enough money for working capital, make sure you get a loan for working capital, include some working capital in the negotiations when you buy the company. 4th, key man risk. You don't want to buy a company where the owner is the one responsible for marketing or is the face of the company, driving sales and revenue, because that's really just a job. You want to find a company where the team is responsible for almost every aspect of the business, and the owner is making less than a couple of strategic decisions regarding business operations every single week. The last thing is client concentration risk. Right? You don't want to buy a company where 30 or 40% of the revenue is driven from one client. If that client walks away, you're in big trouble. So make sure that no client is responsible for more than 10% of the revenue, and that your top 10 clients aren't responsible for more than 50% of your revenue. And it's also a nice bonus if your clientele aren't all in one industry. Ideally, that your clients are spread out amongst revenue and that they're also in multiple industries.